Hi guys, welcome back to Finpact. Didi Chuxing has been in the news because of its IPO that it had just on June 30th. It had the second largest IPO in the US after Coupang. Didi Chuxing is a ride-hailing service like Uber or Lyft, but it's based in China and it has the predominant market share over there. So Didi Chuxing was listed on the New York Stock Exchange for $14 a share on June 30th. This made it the second largest IPO to be listed on the New York Stock Exchange from a Chinese company post Alibaba. So the company sold around 316.8 American depository receipts, raising around $4.4 billion. Its market value reached around $68 billion. It's headquartered in Beijing and it was founded in 2012 and it was founded by former Alibaba alumni Will Wei Cheng, who is the CEO and has led the company since its inception. Now that's the rough background. I want to talk about in this video the current financial state of Didi, what's happening in the markets and how it's impacted its share price post the IPO. Now the IPO price for Didi was $14 per share. The IPO was actually pretty successful, where on the first day there was a 1% increase in share price. The share price increased to around $16.65, which just put the market cap around $80 billion compared to the $68 billion that it had at IPO price. Now, usually I'm skeptical about IPOs. I think sometimes there is too much market exuberance and people getting involved just for the excitement rather than the actual fundamentals. Now, I'm quite surprised that the shares performed so well on the first day of trading. Now, Didi's listing on the New York Stock Exchange came from demand from ride-hailing services increasing because of the pandemic cases falling and a rollout of the vaccine. So more and more people were using Didi to call their cabs. Now, usually I'm quite skeptical around IPOs because I think a lot of IPOs tend not to perform so well. Now, although the share prices increased post the IPO, I think there was quite a risk because Chinese regulators have been cracking down on a lot of tech companies within China. And this is as a broader antitrust crackdown, resulting in a lot of fines and penalties for many, such as JD.com and Tencent. So the risk of Chinese regulators cracking down on Didi was definitely a sore point, and that's what impacted its share price recently. So with this increased Chinese regulatory scrutiny, Didi's app was actually taken down from the App Store, and people believe that this will very much affect business for Didi. And this article on Reuters says that Didi says app takedown may hit revenue. Other US-listed Chinese firms probed. So Didi Global said that a regulatory order was made that the app be removed from app stores. So they said that this app takedown could hurt revenues. I mean, naturally, if you can't download it on the App Store, I just wouldn't download it. That's just what I would do. I would download whatever's easier for me to use. I have an iPhone, so I would download whatever app is easier for me to use. And if a lot of people use that method, then this could really impact business. In tandem with this, Didi's shares fall after China announced a cybersecurity review just days after the IPO. So this was all part of why it was also taken down from the App Store. So Didi said to Reuters on Monday that it was unaware before the IPO that the government would launch a cybersecurity investigation or order halt to China to new user registrations and a suspension of app downloads. So this can strongly hurt Didi's share price. If we look at Didi's share price, we can see that around the IPO from June 30th, we saw it increase to the high we saw at around 16.82 at its highest. And right now we are trading still above IPO price, which was $14, but at around $15.53, which is the current share price. Before I go into the quarterly earnings report, I want to just touch upon this article I saw on Forbes that Didi Chuxing, different countries, same bad business model. And this person's stance is that Didi, which holds around 90% of the ride-sharing market in China, has an unprofitable model just like Uber and Lyft. So the reason this article thinks it's a bad business model, not just Didi but also Uber and Lyft, because of the fact that it's a low-margin industry, there's intense competition, and there's a lack of differentiation between services. So what's stopping someone taking an Uber rather than just purely price than maybe a Bolt or a Didi for that matter? That's kind of the narrative, which isn't looking too good right now for Didi, especially with the Chinese regulatory crackdown. Now, I don't want this video to be one-sided. I wanted to show you that it performed well post the IPO and that it has a large market share in China, but that there are risks with the regulatory scrutiny, and I also wanted to show you that some people also consider this to be a bad business model. But let's look at their financials to make more of a fairer judgment. So you can find the information on the SEC's website. So Didi actually reported an an increase in their revenue to around in dollars $6.4 billion. And in renminbi, you can see this increase in revenue that they had. They had 20.47 billion in 2020 for the 3 months ended March 31st, and they had around 2 billion in 2021, and this was a 106% increase. They even changed their loss into a profit by a substantial amount, and in dollar amount this was an $837 million profit. So on drwealth.com, I like that some of the financial performance is shown in graph format. You can see that the gross profit margins have increased across the years. It has decreased a slight bit in terms of the actual gross profit margin. So in terms of the balance sheet, they have a cash and cash equivalents of around $3.6 billion. Now in renminbi format, you can see that it has actually been increasing over the years. And even in the US dollar format, it has increased from last year. And if you look at Didi's balance sheet here, you can see that their cash balance has actually increased over the years. So you can see in renminbi format, it has increased, but even in US dollars, it was around almost 3 billion in 2020 as of December 31st. So that was for the full year. Whereas as of just March, it's a lot higher than what it was as of December 31st. So it's actually $3.6 billion as of March 31st. So just in the first quarter, it's exceeded its amount. We also need to look at their total assets, which is around $24 billion. And that is definitely more than covering their total liabilities of $4 billion. And some key stats about their presence. They have a presence in around 15 countries, nearly 4,000 cities. They have 493 million users and 15 million active users as of the first quarter of 2021 for both these stats. And they have 41 million average daily transactions. So you can see they have a large presence, and this is supported by their financials. It's just unfortunate that recently they've had some negative things happen to them, such as the App Store takedown. So I think that right now there is a bit of negative sentiment on Didi. Now, although Didi stock has had great financial performance in this quarter, and it didn't even have too much of a bad start with the IPO, I'm going to hold off from buying it just because of the risks with the regulatory scrutiny and the fact that it's been taken down from the App Store. So because of those reasons, I'm not going to be buying it anytime soon, but that's not to say it couldn't be a good long-term investment. So those are just my overall thoughts. I haven't done a huge deep dive in the financial analysis here like I did in some of my previous videos. So if you want that, I can post another Didi video, breaking down the ratios, the margins, that sort of thing, doing a DCF if you want. But until then, this is just my kind of overview level thoughts on Didi stock. Let me know what you guys think in the comments below. Did you invest in it during the IPO? Are you going to be investing in it? Also remember, none of this is financial advice. This is just my own research, my own personal opinion, not financial advice. Make sure you do your own research before you invest in anything. Also, guys, I have a Patreon where I talk about the trades and the investments I make for my own portfolio in real time and my thoughts on the overall market. So check that out. It's linked in the bio below. You get a lot of support from me, and depending on which tier you select, you can even get one-on-one phone calls with me. So love to see you guys on there. I also have a link down below for WEBULL where you can get 2 free stocks when you deposit your first $100. And those 2 free stocks can be worth up to $2,000. And before you guys go, please hit that like button down below so we can help push this video out so that more people who can't normally see my videos get to see this video. And if you haven't already subscribed, hit that subscribe button down below and that bell notification to get informed on when I release a video, as a lot of it is time sensitive information. Thank you guys for watching. Bye.